What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for advanced micro devices with the ticker symbol AMD. This was a viewer's request, and thank you for your donation. I will first go over what I see on the daily chart and finish the video off with the weekly chart. So this viewer left a donation, and if you guys are also interested in joining my membership, where you can get 4 stock requests a month, link in the video description below. So let's take a look at the daily chart for AMD. Well, is it going to pull another Nvidia and continue moving much higher, or is this a top right here and we're going to go down? Well, let's take a look at the chart. And also, this viewer asked for a price target in maybe the next couple of months to 6 months, so they can get out of their position. Well, I don't give financial advice, so I can't say where to buy or sell, but I can say where the price is probably going to go in my opinion, based on the technicals, and then probably where I would get out. So let's just do that. So here we have the daily chart for AMD. You can clearly see there was this measured move up. So I'm going to show you guys that right now. So we had one massive leg up. And how do I know that the arrow stops right here instead of here or somewhere else? Well, there was multiple legs up. So you can see there was one leg up here, 2 legs up, sold off, made another leg up. But this is one large leg up because this was the biggest move down in this entire up move from the bottom, $54. So we can go and clone this. And this was the next target, or excuse me, this was going to be telling us the target for traders, and it was right at the 128 level, and you can clearly see that's when the large selling came in. So price made an exponential move up at this target, and you can see the large selling come in. There's this gap right here. There's a very good chance of that being filled in the next coming weeks, and possibly even a drop down back to this breakout point. So there was this very strong key level right here at the $100 round psychological number. So these round psychological numbers, 75, 100, 200, 50, 10, they're very important levels. And if you notice on the chart, a lot of times price reacts to it very nicely. So this is the $100 round psychological number. It was previous strong support. Prices started finding resistance from it. This was a failed breakout. Started finding resistance and found resistance. Prices bounced off this prior level. This $100 round psychological number only went down this far, so where you can clearly see there was a bullish imbalance now, because prices hit this level right here, the same level, and it went down all the way to the 54. Prices came back and hit the same level, but it only came down to hit 80. So you could see that there was a bullish imbalance on the chart, meaning there's more aggressive buyers in the market that want to drive up price, and then aggressive sellers that want to drive down price. So the measure move was met, and also let's put on this channel right here. Clearly there was this upward channel, and just prices just broke it right now and made a new high of it. And also in this slim uptrend channel, prices had an overshoot. So again, this is all a recipe for a very large pullback. Basically, we have 2 large legs up. We're finding resistance at those 2 large legs up, and also you can see there was a huge gap that was formed, and also there was a breakout of the $100 level that has not been tested as support. So price probably wants to come back to this breakout point to test it as support. Orange uptrend channel has a break and new high, and this green uptrend channel has an overshoot. So those are climactic points. So again, this all just adds up to a very decent sized pullback, probably to the $100 level. So there's a good chance we're going to probably see prices drop because they're definitely unsustainable. I mean, can it continue higher? Yeah, but I mean, the probability is very low. It's very rare, maybe like 5% to 10% of the time we just overshoot in a measurable target. Meaning, if this was the target, we don't just normally just keep on driving up, past it. Usually we meet it and then see a correction. The market resets for another leg up. So since this looks like a potential bull market, meaning the stock looks to be potentially bottomed, then that means that price should continue higher after this potential pullback. So I'll be looking for 2 large legs down at this $100 level. If this $100 level acts as support, we can make another large leg up off of it. So that's how I'm looking at it right now. I think some traders probably got out of their positions, and they're probably waiting to enter on a pullback. But if you're like a buy and hold, type of trader where you just want to ride the move up all the way, then there's still a good chance for prices to resume the uptrend after a correction. Again, this correction could lead to a top, but more than likely it's not, and we're going to see higher prices. So after these 2 large legs down, probably to the $100 level, Again, this is what's most likely going to happen. Obviously, we can probably stop at the 110 level. We can stop at the 115 level, but this is just most likely what's going to happen, where we see, 2 large legs down, fill in this gap that was created at the 108 level, probably back down to this $100 level to test this support. From over here, that's probably when the next move up is going to occur, the very large one. Again, this is just most likely what's going to occur. So that's everything I see on the daily chart. Basically, it was a nice uptrend. It met the measurement target. There's a bunch of signs on the chart based on the price and how it's reacting, telling me we're going to see continuation towards the downside, at least in the short term. Once we come up to the $100 level, it needs to act as support. We cannot break it and go down lower. Then obviously more higher prices goes out the window. It needs to support at the $100 level if we can get there, but there's a very good chance we can get there. And once it does hold, we're probably going to see higher prices. So that's everything I see on the daily chart. Let's take a look at the weekly. So here's the weekly chart, and you clearly see that when prices get overextended from the EMA, just like over here, it leads to a big crash down. So we're overextended from the EMA, we could see a big crash down. However, the only difference is that this exponential move up was into all-time highs, while this exponential move up is not into all-time highs. So that's a very key difference to make, because this would lead to a big bear market. However, this one will probably just lead to correction for higher prices, because prices want to continue higher, probably back up to these all-time highs. So there was this downtrend in play right over here. You can see that prices were clearly maintaining this angle of descent, and then it broke that angle of descent, which shows signs of weakness. But we don't just reverse right away. We get 2 pushes in the same direction. It could be 2 pushes of very large magnitude, or it could be 2 small pushes. So in this case, it was 2 very decent sized pushes. So this 1, 2. Once prices just overshot this one just by a small amount, you can clearly see that prices reversed. And before, prices were finding resistance at the EMA, resistance at the EMA, resistance at the EMA, resistance at the EMA. Prices broke it, support at the EMA, support at the EMA. So this could tell you that there's a trend change going on right here. It looks like traders are more interested in driving up the price, meaning taking longs, than looking for shorts. So that's a very good sign on the weekly chart. And also, this was a key level right here at that $100 level, like I mentioned before, a market with a horizontal line, and also this 73 level. So this was a prior range, because prices were going sideways. Prices broke outside the range on the top side, came back inside the range. Price broke on the bottom side of the range. So since we had a breakout on the top side, which it can lead to a breakout on the bottom side, and this is another breakout on the top side. Usually the third attempt of a range breakout is successful. So this is another sign that we're probably going to continue higher. So the first sign was that the downtrend looks to be complete, and it looks like we are reversing. It looks like we had 3 range breakouts, and the third one is successful. So that's why I'm saying when we see that pullback, there's a good chance we don't just continue moving down. There's a good chance we still continue moving higher. So just like I did for NVIDIA, I did a very large measurement target by zooming out and looking at the entire uptrend. So we had an entire uptrend from 2018 to about December 2021. So that was one large leg up. All this was a correction, and this could be the second leg that could be met. So the bulls could be trying to reach for this 210 level. So that's very optimistic. We'll see if we can get there. I would say there's a very good chance of at least reaching the all-time highs in this uptrend. So that would be my target. The all-time highs are very important levels. So this 163 level would be probably where I would get out on most of my shares, maybe 75%. And then if I'm still and the price still looks kind of bullish, maybe ride the next 25% to 210. So you can do some type of thing like that. I would probably do something like that, me personally, just because we could just come up to this level, get a double top, and then start another bear market. So that's the thing, you have to be aware of. But either way, this looks pretty good to the upside. However, just in the short term, that $100 level looks like a magnet. It looks like prices want to come back to test it for support, and if it can hold, then all this would be one leg up. If I move the arrow to the $100 level, you can clearly see that it's targeting the 176, 175 level, so just past the all-time highs. So again, if we pull back and find support above this $100 level, very good chance we continue to rally higher towards the all-time highs, to the 175 target, and maybe the 210, 211 level. So we'll see if that can be reached. Again, I don't do my exit positions based on time. because if you think about it, when people say, oh, I'm holding for 5 to 10 years, what does that mean? They're holding to a very high price target that they have in mind, right? But what if that price target comes earlier? Let's say it happens in 1 or 2 years, then you'd probably exit, right? Because you don't even care about the time. So you're only saying the time because you think price will rise up, in that amount of time. Hopefully that makes sense. So for example, if AMD went to all-time highs tomorrow, you'd probably get out, because who cares about waiting now, because it already went up to your price target. So it's always better to have price targets in mind instead of time targets. So again, that's a very big, that's like the most basic taught thing. Oh, I'm holding for 5 to 10 years, but it's a very large misconception. You never want to hold for time. You want to hold for targets, price targets. So I'm looking for all-time highs. I'm looking for this measure move target. So measure move targets and key levels are targets that traders are getting outside of, taking their profits and whatnot. So again, just a reminder, it looks pretty good. Nothing's guaranteed. Obviously, we can change direction too, but again, it's setting up to continue moving higher. I would say all-time highs, if we find support at the $100 level, which is very likely, all-time highs and possibly the 210 level. But again, I wouldn't, ride my whole position there. Me personally, I know some traders probably will be, they're probably going for the big one, but probably the more safer bet, or more conservative, just get out most of it if we reach all-time highs, and then ride the smaller amount to the 210 level, whatever. But that's what it looks like it's setting up to do. Again, not financial advice, not guaranteed to occur, but this is what I see on the chart. So this is Vee Trades, and thank you for your time. The Vee Trades technical analysis course is now live. Learn to read the chart the right way to prevent costly mistakes. Click the link below to start training now.